I welcome you all in the webinar on economic substance regime of British Virgin Islands and the Cayman Islands. For those who are new to our platform, a small brief about our company. We are 5 years old events and training firm based out of New Delhi and have been organizing public events and training in India, Singapore, Indonesia, Malaysia, Thailand, and Hong Kong. Thanks to COVID, from last 1 year, we are organizing online events, and so far, delegates from almost 65 plus countries have attended our online events. The economic substance regime of British Virgin Islands and Cayman Islands has now been in place for over 2 years. Although there are growing familiarity with its terms, the legislation and industry best practices in this area have continued to evolve, and the substance requirements continue to have a material impact on the business in Asia and structuring of offshore transactions. In this webinar, Peter Vass, a partner at Loeb Smith Attorneys focusing on BVI and Cayman Islands law, will provide an overview of economic substance regime and the latest developments in the space. So over to you, Peter.
Well, no, thanks very much indeed. And hello, everyone. And, thanks so much for having me speak on economic substance today in the BVI and the Cayman Islands. And of course, Raj, thanks to you and the team for organizing and coordinating this webinar. So as Raj just mentioned, my name is Peter Vass, and I'm a partner at Loeb Smith Attorneys, which is a Cayman Islands headquartered law firm specializing in matters of BVI and, of course, Cayman law. And I myself am thankfully based in Hong Kong, which means that it's not too early or indeed late here. Now, I just want to begin by saying a couple of introductory words on economic substance, because I appreciate that some of you may not be familiar with this regime. So in broad terms, economic substance was introduced to combat the shifting of profits by entities to offshore jurisdictions in which there are no or low taxes, so such as the BVI and the Cayman Islands, and in which the entity has no operations or certainly at least no substantial operations. And as Raj mentioned, the regime is now over 2 years old and is very much alive and continuing to evolve. So we have legislation and guidance in the BVI and the Cayman Islands that I'm going to be looking at, which has been amended multiple times. In fact, as recently as the 30th of June. And the regime is now a really important consideration in the context of corporate transactions. So to put some of that into context, in my practice, it needs to be taken into account when structuring a transaction, also in the context of drafting transaction documents, particularly if there are reps and undertakings pertaining to compliance with law. And also from a broader compliance perspective, because as you'll see in this webinar, the penalties for failing to comply with the regime can actually run into hundreds of thousands of US dollars. Now, the enforcement regime remains untested to date because it is still relatively early days. So the best possible advice I can give you, and the advice I always give to my clients, is to comply with the requirements to the fullest extent possible, because we don't yet know what will happen when it comes to enforcement. So I've set out the brief agenda for this presentation on the slide. I'm going to kick things off by giving you a brief overview of what the economic substance regime is. I'm then going to walk you through some of the key concepts with which you need to be familiar in order to establish whether an entity needs to have substance in the BVI or the Cayman Islands. I'm then going to move on to looking at the substance requirements themselves. So in other words, what a so-called relevant entity which conducts a relevant activity needs to do to have adequate substance in the BVI or the Cayman Islands. And I'm then going to wrap things up by looking and comparing the notification and reporting obligations in both jurisdictions, as well as the consequences of non-compliance, and also what we can do as a law firm and a corporate service provider in the BVI and the Cayman Islands to help you and also to help our clients to comply. Now, if you have any questions, then please do ask them at the end of the presentation. I think you can use the chat box in Zoom as well to do this. And if you would like a copy of these slides, then please do send me an email using the contact details, which will be displayed on the final slide of this presentation. So just by way of overview then, as I've said, both the BVI and the Cayman Islands have introduced legislation and guidance to address economic substance, along with around another 135 or so jurisdictions which have also implemented this. And I've set out the latest iterations of the legislation and the guidance on the slide just for your information. I suspect the BVI guidance notes will be updated really soon to reflect some recent legislative amendments. So on the 30th of June, that I will address shortly. So I guess this is a space to watch. Now, I have no doubt that many of you have seen a countless number of complicated flowcharts regarding economic substance and what this is, but I've set out on the slide how I like to think about this. Now, the terms in quotation marks are defined in the legislation, but I want to leave that to the side for now so I can provide you with a brief overview of how this all works. And the flowchart is applicable to both the BVI and the Cayman Islands, and it basically addresses the question of whether an entity needs to have substance in the relevant jurisdiction. And that's actually a separate question as to whether the entity needs to make certain filings and file reports in relation to economic substance, which is something that I will talk about towards the end of this webinar. So just looking at the flowchart then, the first question you need to ask with respect to any entity is it a relevant entity? Because if it's not, then you will not need to comply with substance requirements. But if it is, then you need to ask yourselves, is that relevant entity conducting a so-called relevant activity? Because again, if it's not, you will not need to concern yourself with the substance requirements. But if it is conducting a relevant activity, then you need to conduct an analysis as to exactly what relevant activity is being conducted, because that will determine whether a reduced economic substance test needs to be complied with, which is the test that applies to entities holding equity in other companies and vehicles, and we'll talk about that later on, or indeed whether the general economic substance test applies, which is much more difficult to satisfy in practice. So just keeping that flowchart in mind then, let me now start by focusing at some of those key concepts, and in particular the definitions that were contained in quotation marks on the flowchart. So first of all, what is a relevant entity? And remember, this is the first question in the analysis. Well, I've set out all the different types of relevant entities in this slide. A green tick means that the entity specified on the slide is a relevant entity. A red cross means that it's not. And the significance of the red dotted line towards the end of the slide is that if you have an entity of which falls within any of those categories, so investment fund or tax resident outside the BVI and Cayman Islands, then it will not be deemed to be a relevant entity, even if it falls within any of the categories above the red dotted line. So for example, a Cayman Islands exempted company at the top of the slide, which is essentially the standard form of Cayman company, would normally fall within the definition. But if it's also an investment fund, then it will not fall within the definition. Now, I mentioned at the beginning some recent legislative amendments. That was on the 30th of June, so just a couple of weeks ago. And those amendments essentially brought all types of partnerships within the scope of the economic substance regulations in both the BVI and the Cayman Islands. So previously, only certain types of partnerships were relevant entities, but now they are all relevant entities. And you know, some of my clients ask me what I think the significance of this is. And in a nutshell, I don't think this is really a very important development, because most limited partnerships, particularly in the Cayman Islands, will be investment funds, which means that they will fall outside the definition anyway. Now, I just want to say very briefly on the concept of tax residency outside the BVI and the Cayman Islands. This will apply if an entity can claim such tax residency, but the entity will need to support that claim by filing a TIN number or a certificate issued by that overseas tax authority with the BVI and the Cayman authorities. And just note that in order to claim this exemption, you cannot be tax resident in a state which has been blacklisted by the EU. So in other words, a state which is featured on the EU's list of non-cooperative tax jurisdictions. Now, investment funds fall outside the scope of the definition of relevant entity in the Cayman Islands. I've set out the definition of what an investment fund is on the slide. Now, this is pretty technical, so I don't want to get bogged down in the definition. But what I do want to say is that private funds in the Cayman Islands are so basically closed-ended funds registered under the Private Funds Act, and also mutual funds registered under the Mutual Funds Act are two examples of types of funds that will fall within this definition and will therefore not be relevant. So it's quite a broad definition. Now, just thinking back to the flowchart, if you do have a relevant entity, then the next question you need to ask is it conducting a relevant activity? And the activity that I will be focusing on today is holding business. So holding business is the BVI term, and holding company business is the Cayman term, in case you're wondering why there are two iterations of pretty much the same thing on the slide. This slide does in fact list out all of the relevant activities, and the list is exhaustive. So if you have an entity conducting an activity which is not listed on the slide, then it will not be considered to be a relevant activity. And in that situation, you will not need to demonstrate any economic substance regarding that activity. Now, in practice, I am asked sometimes to give a good example of an activity which would fall outside this list. And so in Hong Kong, as for instance, it's still relatively popular for BVI vehicles to hold real estate and also to be involved in real estate type management. And that's obviously not on this list. So an entity conducting that activity will not be conducting a relevant activity. Now, before I proceed to looking at the definition of holding company business in more detail, I just want to share a couple of helpful points regarding the legislation and things that you should always keep in mind. So first of all, you can absolutely have an entity that is conducting more than one relevant activity. And in that situation, the economic substance test needs to be complied with in relation to every relevant activity. You can't just pick one of them. You have to comply with all. You have to have substance in relation to all relevant activities. Second of all, and I suppose the flip side of the coin to that, is that, as I've just said, you could have a relevant entity which is actually not conducting any relevant activities whatsoever. And in that case, you will not need to comply with the economic substance test. Now, third of all, the BVI and Cayman authorities have confirmed that they will take a pragmatic and commercially realistic approach to the interpretation of the legislation. Now, I don't know what that means in practice. Nobody does, because like I said, the enforcement regime remains untested. But helpfully, the authorities have in fact acknowledged that they will take into account business practices from other jurisdictions which have signed up to the economic substance regime. So I think, that probably will be helpful in terms of having this pragmatic and commercially realistic approach to the interpretation of the legislation. Again, there is a flip side to that, which is that the authorities have made clear that they will police arrangements which appear to be circumvention mechanisms. So if you have companies putting in place schemes or arrangements, the sole purpose, or certainly one of the main purposes of which is just to get around artificially the economic substance requirements, then the authorities will probably not look too favorably upon that. So one of the relevant activities is this activity of holding company business. And I've set out the definition of that on the slide. So it's the it's the business of a pure equity holding company. And the law in turn defines that as an entity that only holds equity participations in other entities and only earns dividends and capital gains. The bolding and the underlining in the definition is my own, and it's just intended to emphasize the key components of the definition that I just briefly want to elaborate upon. So firstly, you've got this concept of equity participations, and that obviously includes shares in a company, but it will also capture other forms of investment in the equity of an entity, which gives the investor the right to participate in profits. And so the most obvious example that I can think of that are limited partnership interests, which have economic rights attached to them. Similarly, dividend income will not only capture dividend income from corporate entities in the traditional sense of that word, but it follows from what I've just said that it will also capture distributions made by non-corporate entities such as limited partnerships. Now, one important element of the definition is that the entity only does the things specified in the definition. And so we often get asked, well, what about an entity which does things that are incidental to the holding of equity? So for example, the ownership of a bank account, because you need the dividends to be paid somewhere after all. What about governance decisions of the board of directors? Contractual arrangements with law firms and other professional service providers, and the payment of fees of those providers? Well, the guidance notes helpfully make clear that those sorts of activities which are purely incidental to the holding of equity participations will not take the entity outside the definition of holding company business. Again, it's really important to understand, though, that the ownership of any other form of investment or asset, so of a non-equity nature, such as interest-bearing bonds, government securities, interests in property, even if they are held in addition to one or more equity participations, will result in the entity falling outside the definition, as will entities which earn income other than dividends or capital gains. Now, I just want to show you how important it is to look at the specifics of any arrangement to establish whether an entity falls within the scope of this definition. So I've set out some examples on the slide. In the first one, you've got a Cayman company which holds all the shares in two other companies and gets dividend payments in relation to those shares. And those payments are paid into an interest-bearing bank account. And the bank account, of course, is used to receive the dividends and also to pay the company's expenses. Well, this would squarely fall within the definition of holding company business. And the point I want to make is that the receipt of incidental interest income on the bank account and also the payments relating to the company's expenses will not affect the classification because those are purely incidental to the holding of equity. On the other side of the chart, in the first example, you've got a Cayman company which has a brokerage account. That account only holds equity participations in underlying entities. Well, actually, you might be surprised to learn that this will not fall within the definition. And that's because the correct analysis here, legally speaking, is that the Cayman entity's only asset is a claim against the broker. And that's because the Cayman entity does not actually directly hold or manage the equity participations. That's done by the broker. And so in this example, the Cayman entity will not be conducting holding company business. In the next example, you've got a shipping company, a Cayman company, which is a shipping company, which happens to have acquired all the shares in another company, which is a BVI company. Well, actually, the question you should be asking yourselves here is whether the Cayman company is conducting the relevant activity of shipping business, which you may recall from one of the earlier slides is a relevant activity. And in this example, the holding of equity is clearly not just incidental to the shipping business, which is clearly a business on its own right. So this will not fall within the definition of pure equity holding company. And then in the third example, you have a Cayman entity which acts as professional trustee, it holds equity participations in its capacity as trustee, and it provides trustee services. Well, the guidance notes make clear that if assets are not being held for your own account, then you will not fall within the definition. And presumably also in this example, the trustee will be receiving fees for acting as such, which of course is fees other than income arising from dividends and capital gains. So in this example, there are actually two reasons why the entity will fall outside the definition. Now, what do you do is a question I am often asked. If you have an entity which is a relevant entity and it's also conducting a relevant activity, well, you basically have three options if you want to comply. You can either discontinue the activity or at least modify it so that it no longer falls within the definition of the relevant activity being conducted. You can cease to be tax resident in the BVI or the Cayman Islands and become tax resident in a state which is not on the EU's non-cooperative list of jurisdictions for tax purposes. Or alternatively, you can ensure compliance with the economic substance requirements. And that's what I want to talk about now. So I mentioned at the outset that there is a reduced economic substance test, which applies with respect to holding companies, and the general test, which applies to all other relevant activities. So let me start by taking you through the reduced test, which applies to holding company business. So this is set out on the slide. The first limb of the test specifies that you need to have complied with all of the applicable filing requirements under the relevant Cayman or the BVI legislation. And the second limb is that you need to have adequate human resources and adequate premises, in my example, in the Cayman Islands, for holding and managing equity participations in other entities. And by the way, for the purposes of going through the economic substance analysis, I will be focusing on the Cayman Islands just in the interest of time, but the BVI position is actually really similar. So we often get asked what an entity which is passively holding equity needs to do to comply with this test of having adequate human resources and adequate premises in the Cayman Islands. And the guidance notes make clear, and actually market practice has emerged, which demonstrates that by merely engaging a registered office service provider in the Cayman Islands, which of course all Cayman entities have to do anyway to comply with law, will probably satisfy the reduced economic substance test. So it's not difficult to satisfy in practice. If you have an entity which actively trades equity in other entities, then you probably need to do something beyond engaging a registered office service provider to comply. And in that situation, I would strongly encourage you to obtain Cayman or indeed BVI local law advice. Now, for any other relevant activities other than holding company business, you need to comply with the general economic substance test, which has three limbs to it. And again, I'm focusing on the Cayman Islands. In order to comply, you have to comply with each and every one of these limbs. So it's not enough to just comply with one limb, it has to be all of them. So the entity needs to conduct so-called core income generating activities, or CIGA, in the Cayman Islands. The entity needs to be directed and managed in an appropriate manner in the Cayman Islands. And the entity also needs to have adequate operating expenditure, adequate physical presence, and an adequate number of employees or other personnel with appropriate qualifications in the Cayman Islands. Now that's a lot to take in, so I'm just going to briefly go through each of these limbs with you. So first of all, limb one, a CIGA basically means activities that are of central importance to an entity in terms of generating income with respect to the relevant activity being conducted. And as I just mentioned, this has to be conducted in the Caymans in order to comply. And the way this works is that the guidance notes list out CIGA for each different relevant activity. And the entity then has to conduct the appropriate elements of that CIGA based on the activity that is being undertaken. And the elements listed in the definition of CIGA in relation to each relevant activity are neither exhaustive nor mandatory. So it will be a question of fact in each case which elements actually have to be undertaken to comply. And as an example, I've listed out all the CIGA that the guidance notes specify in relation to finance and leasing business. And just to provide a very practical example of how this works. So if we take banking business, which is a relevant activity, if you have an entity conducting banking business, but in practice, that entity is only generating income from deposit taking activities, then that entity does not need to conduct any other listed elements of CIGA other than deposit taking in order to comply, such as hedging. Because although hedging is listed in the CIGA, it's not relevant to that particular activity. Now, outsourcing is permitted. So if you're wondering how entities can comply with this, it's because often these types of activities are outsourced to professional service providers such as ourselves in the Cayman Islands. Outsourcing is not a get out of jail free card though, because if you outsource, you still have to report on that outsourcing to the tax authorities. And also the entity which is outsourcing still has to monitor and control the activities that are being conducted by the outsourced service provider. The second limb of the test is that the activity has to be directed and managed in an appropriate manner from the Cayman Islands. This has a very specific meaning, and I've set this out on the slide. But in summary, what it involves is that there has to be a certain number of directors based in the Cayman Islands taking decisions in relation to the activity in question. And there has to be a quorum of some of those meetings of the board in the Caymans as well. Now, you might be thinking, well, how can this possibly be satisfied in the context of COVID when people cannot travel? You know, even if you had directors that wanted to travel to the Cayman Islands to satisfy these requirements, it might not be possible. But the answer to that is the authorities recognize the challenges posed by COVID. And so actually in the current climate, virtual board meetings may be held to satisfy the requirements, but it is really important to keep documentary evidence as to why virtual board meetings are being held, because if the authorities come back at a later date, and particularly if they threaten enforcement action, then you can demonstrate that the requirements have been taken into account. Of course, it's also possible to appoint Cayman-based directors, so professional Cayman directors based in the Cayman to satisfy some of these requirements. Now, there are a lot of references to appropriate and adequate in the legislation and the guidance notes. I've set out statutory definitions of these on the slide. I'm not going to go into that, but what I do want to say is that ultimately what is appropriate and what is adequate will be a matter for the directors to consider. And at the end of the day, they will need to make a determination in good faith. And again, just in case there is any enforcement action in the future, it's best practice to retain records to demonstrate the adequacy and appropriateness of the decisions of the directors. So that would involve keeping comprehensive minutes of the board. Now, the final limb of the test is this concept of adequate operating expenditure, physical premises, and personnel with appropriate qualifications in the Cayman Islands. Now, just very quickly, often a lot of this will be outsourced as well. So, for example, the physical premises do not need to be owned by the Cayman company. You could have a professional service provider which provides office space on lease or license. In terms of personnel with appropriate qualifications in the Cayman Islands, just to give you an example of what this means. So let's say there is a business which employs 19 people in the Cayman Islands, but the only person with the necessary qualifications to conduct the relevant activity as an individual based outside the Cayman Islands, well, in that case, it's unlikely that the test will be met. And because this is not just about conducting a quantitative assessment, but it's also very much a case of looking at the qualifications of the employees in the Cayman Islands. So there is a qualitative element to all of this as well. Now, in terms of the notification and reporting obligations, this is a separate matter to whether an entity needs to have substance in the BVI or the Cayman Islands. This is quite technical, so I just want to provide you with a brief overview. So in the BVI, the economic substance financial period runs from the 30th of June to the 29th of June, and the report that needs to be filed is due within 6 months of the end of that time frame. So this year it will be on the 29th of December for most entities. And that report includes different pieces of financial ownership and other data, and ultimately what needs to be included will depend on the specific circumstances of the entity. In the Cayman Islands, you've got essentially a two-level filing system. So a so-called economic substance notification needs to be filed by all entities, which is due by the 31st of January of each year. That includes only very limited information as to whether the entity is a relevant entity and also whether it's conducting any relevant activities. Now, entities which are conducting relevant activities in the Cayman Islands and which are tax resident overseas also need to submit a much more detailed economic substance report to the tax authorities in the Cayman Islands. And the information that goes into that is really similar to the information that goes into the BVI report. So different financial ownership data, etc. And again, exactly what needs to be filed will depend on all the circumstances of the entity. The economic substance return is due within 12 months of the end of the relevant economic substance financial year in the Cayman Islands. Now, everyone's always very interested to know what happens if you don't comply. As you can see from the slides, the penalties for have substance where required can run into hundreds of thousands of US dollars. So this is really important. And those are just the penalties for failing to have substance. There can be additional penalties under the legislation for missing reporting deadlines, for providing false information, etc. And also, don't forget that if you have BVI or Cayman entities which have entered into contractual documentation that include representations and undertakings with respect to compliance with law, then there could be technical breaches of that as well. The last point I want to highlight in relation to this slide is that the authorities can also move to in extreme cases. And usually this will be a remedy of last resort, but in the worst cases, the authorities do have discretion to strike entities off even before they have imposed any financial penalties. And again, we don't know how this is going to play out in practice because the enforcement process has not been put into play yet. So it brings me back to one of my first points in this presentation, which is to comply to the fullest extent possible. So what can we do as a law firm and a registered office service provider, so a corporate service provider, and what do we do to help our clients to comply? Well, first of all, we can provide a classification service. So we have clients that don't know whether they are a relevant entity, and indeed, if they're conducting any relevant activities, we can help them figure that out. We can also provide advisory services, which goes beyond the mere classification of activities. And it essentially involves advising on what an entity needs to do in practical terms to satisfy the economic substance test where relevant. We can, of course, assist with making and advising in relation to the different filings in the BVI and Cayman Islands. We can also provide economic substance solutions in both jurisdictions. So, for example, if you have an entity which is struggling to meet the managed and directed test, then we could provide a local director. If you have an entity struggling to source its own office space in the BVI or the Caymans, then we can provide office space on license or lease. And then lastly, of course, if we have a client that is not currently meeting the requirements of the economic substance regime, then we can assist with restructuring of that business in order to aid compliance. So that's it from me. Thanks very much for listening. I will take questions now. I see that a couple have come through actually, and I have included my contact details on this slide. So as I said at the outset, if you would like a copy of the slides, or if you have any questions on BVI or Cayman law, then please don't hesitate to reach out. Thanks very much.
Thank you, Peter. Thank you so much for the insight on BVI and Cayman Islands. So still people are gearing up to this topic. And I think after this particular webinar, there's a good insight on this, the BVI and Cayman Islands. And I guess whatever questions they have, they can directly write to you. Peter has already shared his email IDs. So many of us, they were asking for the PPT deck. So Peter will directly share with you. Oh,
Sure,
okay.
That's right.
Yeah, so there's a questions. Could you please take example of restructuring? The question from Ravi Sumani.
Absolutely. So just on the slides, just ping me an email. I'll be more than happy to share the slides with you. On the restructuring question, that's a good one. So one of the most difficult relevant activities to demonstrate economic substance in relation to is intellectual property business. And so I recently had a client which had a BVI entity that was holding intellectual property, and the client could not properly demonstrate economic substance in relation to the generation of income from the holding of intellectual property. And so we had to make that problem go away. And so we had a couple of options. One option was to cease was for that entity to cease being tax resident in the BVI. So that would have taken it outside the scope of the definition of relevant entity, but they didn't want that. And so ultimately the solution we provided was to novate away the intellectual property from the BVI entity to another group company. The BVI entity was being used for other purposes as well, the BVI entity, but there was actually no reason for the intellectual property to be held by that BVI company, which is why at the end of the transaction, we suggested novating that to another company.
Great. So Peter, with this, we'll close the webinar, and I'm very much hopeful. Again, there were questions regarding PPT. So I request everyone, you can note down the email ID of Peter, and you can directly ask for the PPT deck from him, and he'll definitely share with everyone. So thank you very much, everyone. And for those people who are attending this webinar, we'll be offering special discount for our upcoming workshops on exit strategies and business valuation with Aswad Damodaran. So do reach out to our team, and we have already shared our website, idealsnetwork.com. So reach out to us. Thank you so much for joining. Thank you so much for people who are joining us from YouTube and other social media sites. And thank you so much for those who have joined our Zoom platform. Thank you, everyone. Thank you, Peter, once again.